Lots to talk about now with Andrew Schiff from Euro Pacific Capital. Andrew, welcome back to Arise Xchange.
Nice to be here.
All right, let's start with home sales. How much of this is good news about the housing markets and the economy, and how much of it is about a fear that interest rates are going to go up?
I think mostly about the interest rates. So first of all, the new home sales is about 10% of the market. So people put a lot of weight on the new home sales, but it's a very small percentage of the market. And it's
but existing home sales are doing okay too.
Yeah, they're not as good as this last new home sales number. But I think a lot of it has to do with interest rates. Again, interest rates and home mortgage rates are still very close to all-time lows. You can get a 30-year fix for 3 5/8, 3 7/5. Very low, and that's pushing a lot of money into real estate. And if you look at there's a very high number of investment purchasers now, as opposed to mom and pops. So you have a lot of investment money going into the housing market. And I think it's a lot of it is a function of low interest rates. It's not that the economy is doing so strongly. Income growth isn't really there. Household formation, which is a key guide for housing, isn't that strong. So I think it's mostly a monetary phenomenon, as is the stock market. I mean, you mentioned that the all-time high in the NASDAQ and the lead-in. Don't forget the NASDAQ finished last year close to an all-time high. So even though the NASDAQ is at close to an all-time high, it
hasn't grown that
up
much.
1% for the year.
Right. Well, the NASDAQ also had a very long way to come back after 2000. When it was
all the markets are pretty much flat this year. The QE program came to an end in December, and since that time, the economy's been flat. We're still waiting for the second quarter, bounce back that we had last year, but we're not getting it. The PMI you mentioned the durable goods orders. They're still durable goods have been down 3 of the last 4 months. It's kind of skirting quasi-recessionary.
Why are we still struggling then with the economy, in your opinion?
Because there's the real economy is not there. I mean, what we got with this stimulus with the QE and the 0% interest rates is you get some wealth effect. You get a lot of signals that look like a strong economy. You get rising stock prices. You get rising real estate prices. A lot of the stock prices have to do with share buybacks and dividend payments, which are all financed by cheap money. So it creates the illusion.
We are starting to see some top-line revenue growth, though, aren't we? For those companies in the earnings reports, I mean, it's been better. It's
been a little better, but I'm just looking at figures from last year where there's a record number of share buybacks, and that's starting to wind down.
And that's financial engineering, by the way.
Sure.
And that's we have to say that share buybacks artificially juice up the prices.
It's bringing forward future revenue growth to today because you're not spending that money on R&D and plant and equipment and business investment and productivity, which are big things for future growth. Those are
I know you're not a fan of the Fed and the Fed's policy. Janet Yellen says we no longer should look at a date of rising interest rates, but on the path of rising interest rates. And I have said this is sort of a new Chinese proverb that she came up with. What does she mean, and what is she trying to do? Is she trying to hedge here?
There's another guy, I forget the guy's name, who a Fed governor was saying today, watch out, maybe September is a possibility. But what she means by that is we'll start sooner, but we'll go slower. I mean, everyone kind of thought that the benchmark for this would be back 2003 and 2004 when Greenspan finally raised rates after they were 1% for a year and a half. And he raised rates at 0.25% for 17 consecutive meetings. So went up, 2.5 basis points in 2 years. Everyone kind of thought that's what they meant when they were going to start raising rates because they've been at 0 for 7 years. But she's trying to tamp down those. So we'll start now, but maybe we'll go to every other meeting will raise 25 basis points. That's what she's kind of signaling. But she's still trying to manage expectations by saying, look, we're not going to raise interest rates very much, even though we might raise them.
Some have said they would have raised interest rates by now if not for Greece. Is Greece a contagion here in the United States? Yeah.
No, Greece is, people forget about Greece. I mean, Greece is a very small economy. People are making a big deal about what the impact Greece could have. Meanwhile, they're very optimistic about the deal that was supposedly announced, but they're still pretty far off from a deal.
I
don't think it's Greece. It's the fact that the economy can't tolerate, our U.S. economy can't tolerate higher rates.
I want to ask you about Alexander Hamilton. Back in the news today, excuse me. Sorry for throwing pens at you.
No problem.
I'm very excited about Alexander Hamilton. Ben Bernanke and Jack Lew put him back in the news because they're going to demote him. You're probably not a fan of him since he created the central bank.
Actually, I'm not. I read the Chernow biography of Hamilton, and it's a great book. And Hamilton is an incredible individual. I mean, I agree with Bernanke on this one. If you're going to bump somebody, it should probably be Jackson, because Jackson's got a spotty record. He wasn't the most magnanimous of individuals. You need a non-president. So you can't kick off Benjamin Franklin on the 100, so he's safe.
Right.
So I think maybe Grant on the 50. Or Jackson
but no
on the 20.
One uses the 50.
I'd say get rid of Jackson, even though he's named Andrew.
Andrew Schiff, thank you so much. I promise not to throw any more pens at you.
Okay, no problem. I can handle it.